All right, hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros, and we have a lot to talk about. There is a lot that has been shifting and happening here over the past week of trading. There are many weeks where things are dull and nothing is happening and the message of the market remains the same. This was not that. I think over the last 5-6 days, it has become clear that we need to shift gears here as active participants and active traders. And we're going to talk about exactly what we're looking at here, because there were some large moves just generally through earnings season, both to the upside and downside. But I think the message of the market is becoming a bit more clear, and I want to paint that picture for us here in this week's episode. So let's get into it. I hope you're doing well. We're going to start with, frankly, what I think is kind of maybe an underreported story, or maybe just lots of participants that just kind of shrug it off, read the headline, and just kind of off busy with their day. But this is effectively the US's involvement with currency intervention, coordinated currency intervention with Japan. And this is, of course, in the United States' best interest here to support the yen. This isn't exactly quantitative easing. We're not printing money, at least not yet, but this is supporting the yen so Japan does not have to sell off treasuries aggressively. It's effectively the US's way to try and put a cap on the bond market that is kind of in free fall over the last few weeks. And it is trying to, again, ease the borrowing costs for governments and companies here domestically. But I think this is important. This is perhaps Act 1. Maybe there's more to come here, but I think this shows the US administration's intent to really support financial markets as much as possible. And I think it's a big story. This is now kind of the second, there's a few dots here where it is important to understand maybe the macro or just the big messaging of what has changed this week. We're going to look at the nitty-gritty price action details for most of this video. This yen intervention is a big story. Last week was situational awareness kind of getting liquidated. That was a major stressor, vulnerable point in the market. They were a huge actor. They had a lot of leverage. And so that getting cleared out was kind of, a cleansing event. This is happening a few days later. And we also got through earnings season relatively unscathed. The big Mag 7 companies and other large companies basically reaffirmed AI demand, and we did not see CapEx get cut. Those three things that all kind of happened around the same time, I think is what's giving some of the breathing room and spark to what we're mostly going to be talking about today. We did have the jobs report out here on Friday. It was weaker than expected, but again, we're in this kind of game where weak is good, bad news is good, because maybe the Fed is not going to move on raising interest rates next meeting. I posted this video yesterday, Thursday, on the YouTube channel. I do recommend it. I'm going to touch on some of what I talked about in this episode, but we are internally seeing what we call kind of a momentum breadth thrust. All right. This chart here shows what this looks like based on the way we're looking at stocks. We're curating momentum and high beta stocks, the way we're looking at price action signals on them. This is very kind of unique. Maybe it lines up with other things, but this is very much our process on how we look at momentum. But we recently this week this is an orange dashed line on the very right-hand side of this chart. The last time we had one was coming out of April, which was the slide here. And then we had that first kind of ceasefire between the US and Iran, and markets went off to the races. This is overlaid just on the S&P 500. But of course, we know in this 2-month span, we had many stocks going up 150%. The last time we had this breadth thrust for us was coming out of Liberation Day tariffs. We know what that led to. Had two breadth thrusts in here in 21. That didn't work out as spectacular. We kind of chopped around. We put in a bottom. Some individual stocks did perform, but generally speaking, the market did not go off to the races. And then before that was COVID. We got a lot of them coming out of the lows here from COVID. So the point is we are seeing from our process this week showing up as a potential V-shaped move that can catalyze us for a multi-week period, a multi-month period, something to that effect. Obviously, this is all probability based, but these are the signals. This is the evidence, the process we use to get invested in these high beta stocks. Now, a couple of things to be aware of is old leaders may not be the new leaders. So this is Micron investor. If you've been one over the last year, you're very happy. If you've been a Micron trader or investor over the last month and a half, you're probably not happy. But the point is this was a huge winner for multiple years. It hasn't really led the charge out. So while we're getting a flurry of buy signals and we're saying momentum is back and it's time to be invested in a lot of these individual, mostly AI stocks, mostly high beta stocks, it's not Micron that's leading the charge for us anyway. Might be perfectly fine. I've been picking on Micron a lot recently. I'm sure the bulls will be just okay here, but it's not leading with a fervor. Again, on that same similar type of trade, when you're looking at memory and disk storage, SanDisk, Western Digital, they both reported earnings this week and they were both, down, flat to down by the end of the week. So expectations were high. A lot of those earnings got pulled forward, baked in. Investors were demanding a lot and the stocks are kind of just, again, moving sideways here. Not wrong, not terrible, not bad, but just not leading. Here's some of the things that are starting to lead. Palantir. So Palantir was kind of dead for a while. This was it. Slide, 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 slide. Everything was, kind of retracing lower here while Micron was going up, 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 up. And so was Western Digital and so was SanDisk. They were the leaders in this. Palantir, along with a lot of these other software names, were not getting any love. And now it looks like the pendulum is kind of going the opposite direction because we're getting a breakout here in Palantir. We saw volume come in. We saw them reaffirm or actually raise revenue for the full year or forward. So life is kind of good here again for software. SpaceX, a different type of story here, but I just thought I'd throw it in as a general sort of sentiment gauge. They reported earnings for the first time as a public company. Of course, they've been in slide mode here for the past month or so, and it seemed to prove like a good floor for the market. We got about as low as 105. The first tranche of shares unlocked this week. I think SpaceX, look, I think everybody is enamored with SpaceX because it's such a personal, it's just a believable story. We know that TAM is huge and it's just very inspirational as a company. So I think it's an easy sell if you're an investor to get involved in the vision. I think the amount of capital expenditure that is coming out here, which was a lot bigger than the street was expecting, is one thing to note. And I would say that this company is definitely going to have to be raising more capital in the future. So expect more dilution. Doesn't take away from the big TAM and the huge vision and the very higher likelihood of success of getting there eventually. But I think the road is long. There's more unlocks to come. I would like to be a SpaceX investor as well, but I just need to see more proof. So all's to say, nice little floor put in on SpaceX. Now, before we get into the numbers, our sponsor of this episode, Investors Business Daily, shout out to them. They've been sponsoring our content for a while. We've got deals in the description of this video, Market Surge, IBD Digital. Check it out. Links for both. Tell them Evan sent you. Now let's look at some numbers here. So this is how we fared on the week. Gold. This is a big standout this week, which we're going to talk about, up 7.25%. It's been a while since we've seen that. Look at the Qs though, up 5%. That's a huge move. Russell 2000, huge move. SPY, huge move. Oil, huge move in the other direction. SPY, we did get our breakout. I've been a broken record here over the last month and a half in the S&P 500. We're range bound. Don't overtrade, right? Neutral. Got sort of bearish to wanting to avoid the market or keep exposure low the last week. That is changed. That's a big flip. We're going to talk more about it. VIX back down to 15. Dollar had a good puke and is in sell-off mode. 10-year treasury yield hasn't quite puked like the dollar has. It's still saying kind of, firm, choppy here. So I think we're still waiting to see which way this ultimately breaks. Here was the sector performance this week. I mean, technology, 7% move. So this is a big one. Materials also very big move here. It was really energy, real estate, utilities that were the drag on the downside. 52-week highs and lows. I don't have too much to say about it. It's not glamorous, but it's kind of more status quo of what we've been getting, about 100 stocks per day hitting 52-week highs. I guess that's just, we need to be really all-star kind of stock pickers to really, zero in on those stocks. Don't have too much to say about either of those. And Bitcoin, well, Bitcoin's just doing sideways chop, really kind of frustrating a lot of people here. Again, not a whole lot to say. Clarity got punted. We did not get a vote before the Congress recess, so we are going to be waiting until after recess time. Until then, I don't know, maybe more chop. I think this is obviously the big relevant, July highs, June highs. If we can break out from there, then maybe we could get a nice move back up into the 70s. For now, it's kind of just chopping around, not doing a whole lot wrong, not doing a whole lot to reward the bulls. Next week, we got CPI data, inflation. Let's see, inflation rate month over month, CPI. What else do we have? Oh yeah, PPI. So couple of important data points that the Fed will probably be looking at. So the market expects some reaction there on Wednesday, Thursday. Otherwise, I think that's about it. So let's get into the numbers. All right, we've got Warden TC 2000 in front of us. Here we go. S&P 500. This is the classic index level range that we've been looking at here. Again, don't overtrade. Don't get too excited at the highs. Don't get too depressed at the lows until we get a range resolve. That happened this week. So Monday was a fierce session where we pretty much gapped and go type of day, where big expansion in range, we closed towards the range highs, and then you got a picture perfect, higher than, average follow through day. And so that was the 1-2 punch confirmation of this market kind of breaking out. And we did a little bit of backfill here for 2 days, and then we started to move higher on Friday. So this to me looks good. Could we chop around? Could we come back down, test 7,600? Yeah, maybe, sure. Like that's all in the realm of possibility here. But the bulls clearly got the breakout, got the momentum, and got sort of the energy back in their favor. Now, let me pull up our research here because this is our market navigator. And again, we say to ourselves, what a difference a week makes, because now we are in a 3-day streak back in the strong swing environment. This market navigator, it's built for swing traders. It's designed not to get chopped up. I mean, that's obviously its goal. That's everyone's dream, is not to get too whipsawed. I think we do a pretty good job at it, but this is, probably as close as it gets to being kind of a whipsaw type of thing. But when we look at our outlook here on the market environment, we basically downgraded it coming into the month of July. That first week of July, we went into our mixed state, and then we started printing the bear state here. And again, this is S&P 500. Obviously, individual stocks are moving a lot more in both directions, but we were basically hands off, kind of avoiding, more pessimistic on the market. But as the information changed, we got our flip back up into the mixed state on Tuesday, and then on Wednesday, Thursday, Friday, we're back in the bullish swing environment state. So for us, this is a risk-taking environment again. We're going to have stops in place. It's a fast move, but that's what the modern era does, really. The thing I was thinking about is this is the age of V-shaped rallies. I think when we look back on this era, we are going to see just so many of these V-shaped, patterns that folks will probably over index on and start to over optimize on building strategies and all that kind of stuff. And eventually it'll morph and fail and it won't be like this. But for now, we are in the age of V shapes. I think this is another one of those moments. So for us, again, market has been improved. We saw it both on the market navigator side of things and the momentum basket where we got all of those signals coming through. Let me show you our main dashboard here. So again, if we look at Friday's scoreboard here, S&P was up 0.6, Galahad was up 85 basis points, Rocket portfolio was up 2.5%. We got 46 active signals on the broader signals list. We've got 11 positions in our core portfolio. So this number here is our core portfolio. We're fully invested across 11 names, and that's what gave us the 2.46% performance this week. But if you look at the signal allocation, the sector allocation here, again, you can see it's very dominated by information technology, but it's not the only thing. In fact, it's 58%. So there are other things coming through like industrials, healthcare, and other sectors. But this, again, is kind of the 1-2 punch of the broad market index perspective from Navigator flipped up for us. And we got a huge increase in the number of signals that join the list. Those two things, again, just to reiterate and hammer home, those are signs for us to get long. Now, let's look at some other markets here. Here's the cues. We have, again, bullish development, but not quite all-time highs like the S&P 500 is. We did have this gap and move session here on Tuesday. You can see that we kind of broke through this trend line. We recovered the support. We're still in the middle of this range. I mean, if you do a measured move here, you're probably going to get, so another 10% gets you, I guess it gets you back to all-time highs. So we'll see if that can happen. For now, let's just take one step at a time and try and retest 747 and get a breakout here for the Qs. You can look at the Russell 2000. I mean, this looks pretty nice as well. I posted this on social right here as the Russell 2000 was breaking out. That was kind of your day one take notice. We're starting to break trend lines. We're getting an expansion in range. Then you got the follow through day. And I think that is kind of where you start to change gears and really start to give the bulls some of the benefit of the doubt. If we look at semiconductors, again, this is why I say the old leaders might not be the new leaders, because semiconductors, they're still 15% from their highs. And so I think that's notable because they were really the leaders out of the hole here in April. And we ask ourselves, is software the leader here, just as a broad bucket? I think you can get more specific than just software, but is software now the place that is going to see the next leg up and leading out of the hole here? Look at the session. Look at this stranded sort of day here with this powerful gap up on Friday. Again, you've had a lot of earnings announcements specifically on this IGV ETF that's factoring in on its weight, namely Palantir, which is a huge weight. But if you look at Palantir, we're starting to move out of this choppy zone. We're starting to break out. We're seeing heavy volume. You're looking at things like SHOP, which is, again, breaking out of a big congestion area, starting to get going. You saw Net Cloudflare, which had a big gap up. They sold it, but it's trading at highs. On and on you go. Software, just an easy label to say some of the places where you're getting more energy, especially in the individual holdings, a CrowdStrike, things like this that are trading back at highs. So that's a little bit of the, kind of sector breakdown. Technology had a huge week. You can see it looks similar to the Qs though, kind of coming out of the hole. I think you've got to talk about gold this week because on the weekly chart, this is your first hey, I'm alive and bulls are making a stand again. Heaviest volume traded week going all the way back to the first quarter in March. Big expansion in range, kind of blew through this short-term breakout level. Looks like that wants to be a durable low for at least the intermediate term. You could look at silver as well. Very similar kind of look here. And yeah, I think those are absolutely call outs. Gold miners. You could look at even just some of the other metals in mining, the commodity sort of plays. We're seeing some of those show up in our momentum book as well. So if you're in the mining space or the, basic materials space, you don't have to just be tech, AI. There are other places that are getting a little bit of rotation right now if you're looking through sort of, looking through the momentum filters. Oil, not so hot. This was down. This is where there was pressure. If you look at XLE, it's just back in this range here. Looks like it's, kind of fueling up for maybe a early 27 move, but it still seems to be kind of just hanging out. Look at mags. Moving back up here. So again, this has been all over the place. There's been a lot of extreme sentiment towards mags. Even myself at times, looking at just some of these extremes though, there's huge back and forth ebbs and flows. And these are some of the biggest companies, in the world. And you're seeing some big daily ranges here. And so we're moving back up towards highs, haven't quite broken out, not at year-to-date highs, but certainly got a little bit of energy back there. And if you look at the momentum basket, again, MTUM ETF. I think this ETF is probably still very dominated by the old leaders. So we'll see as things start to shift here, if it starts picking up on some of the new stuff. This was, down to, or slightly higher on Friday, still had a good week, but hasn't quite broken out of this range. So it's still kind of, hanging out, let's call it. So I think that's really the big message here is it was a week to take notice, as we like to always say. And I think you can change gears as a swing trader. You don't have to be all in. It doesn't mean, we're just going to be straight line higher. But I think, if you were sidelined and avoiding some of the chop, good on you. You avoided a lot of headaches. And now let's start to play the game again and see if we can catch some swings. I'll show you a couple of our ideas. We had a new buy and a new sell here going into Monday. So Friday's close. Let me show you 3 names on my watch list. So we've got 46 names that we have signals and coverage on. We've got 11 names in our portfolio. Here's 3 ideas for you. I'll start with HPE because we've talked about it. I talked about it last week. HPE, we still own it. This is a portfolio name. We bought it at $48. I think I shared it the day we bought it. So our exit zone's starting to move up. Our target's up here towards highs, and the structure looks pretty good. I like the look. I like the setup. This is an older winner. And so I would say this is one of the old guards that are trying to, stay in the new guard realm. I like the setup, like the name. We still own it. It's part of our portfolio. AXTI. So this one is a nice new signal that came through this week in our flurry of signals. This had a very steep pullback from $140 down to $36. This is why you need to risk manage momentum. Everybody wants to be a momentum trader. You need a process around it. I don't know about you, but I just personally do not like sitting through 70% pullbacks in 2 weeks, in 2 months. That sounds terrible. I would not sleep at night. You need a place to get out. You need a place to get back in. This was a former name, out of it. And now we're back in it. $69. We didn't catch the low, but hey, we didn't sit through all the chop, all the downward pain either. Look at the volume coming through at the bottom. Sorry, let me adjust this chart. Take a look at all the pickup in volume here. And again, we're in it at $69. This did not make it into the portfolio. So this is a signals only trade for us right now. The portfolio did not get a fill on AXTI. Portfolio did get CRDO. So this is the second one I'll give you here on the portfolio name. This was a buy this week, $216 coming in at the open on Thursday. Stock's up nicely already, 15% from the opening buy. So this is a position here in our portfolio. Again, we have our first target up around the highs, around 308. And you can see where the current exit zone is. That moves each day. But these are at least a few of the names that we are back involved in attacking and looking to hopefully, hit some targets and continue to raise up stops. So that's it. That's the changing of the gears, the age of the V-shaped rallies. I think we're still in between it. There are risks on the table. I never like to sound like a blind bull. And of course, anytime you come out strongly one way or the other, you'll always have all the comments just going on the other direction. There are things we need to still just be aware of. I think you still have the Fed, which is a wild card on whether or not they're going to cut, or I'm sorry, they're not cutting. They're either staying the same or raising. That's the risk. They're raising on the next Fed meeting. I think you still have Iran, which is a wild card. You just don't know where that thing's going to end or turn out. Interest rates broadly, the 10-year treasury yield didn't give up a whole lot. And you got the midterm elections. So there are things that are all unknown. Those are 4 unknowns that the market can start to get hit with bearish news that can start to derail the momentum and excitement we're seeing here. But we're going to let price action speak. And right now it's speaking to us like we want to be involved. So that's what we have. We got links in the description of the show. Our sponsor, IBD, our Quant Rockets trading system, or Galahad trading system, which I don't talk about too much because it's not moving a whole lot, but it's still doing its thing. That's a longer term investment portfolio. For those of you interested, check out the traderisk.com, jump on a trial if you haven't already. Thanks so much. We'll see you back here next weekend. Take care.